and center for Arista Net. The other thing is valuation for this name is not too far off 5-year averages. Estimates for this quarter are both 23 and 24% sales and EPS growth. Yep.
Well, we're about to get them right now. They're coming in with their adjusted EPS for the second quarter at 73 cents, a beat of that expected 65 cents. Their revenue also coming in as a beat as well at $2.2 billion, over those estimates for $2.21 billion. They're seeing their third quarter guidance just coming out now, looking at their third quarter revenue to be $2.25 billion. So they are projecting some growth here as well. Looks like it's going to be let's see how their street is responding as we're just getting these numbers. But Dan, just initial takeaways, they are up about 2.5%, quickly moving upwards.
It's been up to 3%, just up just $2 right now, $2.08. Kind of watch for it to as it trades above closer to 130 if it actually gets there. So.
As we're taking these in, George, they did beat on their both top and bottom lines. Still waiting for some more of the numbers to come out, but just initial takeaways as they post that top and bottom line beat.
Well, I think, like I said, the valuation seems to have been relatively balanced. Obviously, there may be some adjustments because the beat was, quite significant. It was about 10 and 10% on sales and 10% EPS. These are beats now because they did report, it looks like 37%. Increase in earnings, beating the estimates, and again, looking at the sales at around 30.47. So these are actually quite good on a trailing basis. But looking at the reaction, obviously it's higher because of the positive reaction or positive print in trailing EPS. Looks like the comps for gross margins too, sequentially and of course year over year, are both higher for gross margins. That's a significant improvement. But I'd like to see what they say in terms of guidance. Particularly for sales guidance. I think that's going to be quite important for Arista Net, and that'll give you more of a pulse on what's going on from the downstream customer standpoint, which includes, of course, Meta Platforms, Microsoft, and even Amazon.
Yeah, we mentioned the importance of margins here. Like you said, gross margin coming in at 65.6%. That was above the 65.4% in the previous quarter last year, above estimates for 63%. So they are seeing margin growth. Operating margins also up and beating estimates to 48.8%. They're also seeing all their revenues rise across the product revenue, $1.88 billion, up 32% year over year. Service revenue, $327.8 million, up 23% year over year. So a lot of this likely going to be, tied to the call and the guidance. We're not seeing too much on guidance just yet. They may be saving that for the call and wanting the street to digest some of these numbers, but now up more than 7%. Dan, what are you seeing
here? Up
here?
8% right here. So it continues to rip higher, up 8.3, purchase right at 126, 127. Watch this area right here, but up to 130 is looking like actually contested.
I want to bounce over here to Supermicro because I'm looking at their chart. Shares down about 11.5% right now. Their adjusted EPS came in at 41 cents. That missed estimates for 44 cents. Sales came in at $5.757 billion, which was also a miss for the 5.88 that was expected. So they missed on the top and the bottom lines here. And the street is not happy about it. Shares down more than 10% right now. George, we're just getting these numbers in here, but there were some big expectations here, and it doesn't look like they're holding up.
Yeah. They're not. And in fact, it's not only the miss on the EPS. Now, there was growth year over year in sales because last year for the same quarter, they printed $5.31 billion. But they did miss the estimate on top line. Bottom line missed by, looks like 3 cents. That's what I have. But I think if you look at the guidance for next quarter, because they're in their fiscal Q4 as we speak right now, reporting that. And so for Q1, for their next fiscal year, the EPS range now, it looks like, is around 46 cents at the midpoint versus 60 cents. So that's a pretty significant cut for next quarter. And then also sales, it looks like the midpoint on sales is $6.5 billion, between 6 and 7. Estimates had 6.6. So they also missed on next quarter's revenue guidance. So, yeah, this is an appropriate move, at least right now, based on the miss, plus also the guidance revision down for the upcoming quarter. The sales numbers, again, are a little bit, questionable because of, we talk about margin. Obviously, that would impact the EPS numbers, but I think a lot of analysts, obviously the market is selling first and asking questions later. what's going on with top line sales? Is that a technology issue, a competition issue, or is it just flat out misrepresentation of what they thought they were going to sell for this quarter, but also for next?
Certainly, yeah. And those exact numbers, for that guidance you were mentioning for Q1, which is their current quarter that we're in now, EPS looking to be between 40 and 52 cents. The street was expecting it to be 60, so a complete miss there, not even in range. Sales looking to be between $6 and $7 billion even. The street was looking for 6.6, so it did miss the midpoint there as well. It looks like, too, they're also just putting in some of their fiscal year adjustments as well. They're seeing for 2026 net sales at least $33 billion. That is a beat, though. They were estimating that to be at $30 billion. So, perhaps something down the pipe that they're going to discuss on the call there, seeing those net sales a little higher than estimated. But overall, a disappointing report for this company. It's a very delicate service that they offer, and it's a service that's being commoditized. They actually physically assemble the servers, so it will be interesting to see what's putting them under so much pressure. I want to jump back to Arista Net, though, as we're looking at their chart. They're up more than 6% right now. Looking at some of their margins, they're releasing margin numbers for the coming quarter, this current quarter. They're seeing their gross margins go up to about 64% for the coming quarter. So that margin story continues because that is also topping out the estimate for 61%. George, for you, how important is that to the story here? We've seen how the margin can be a killer so far this earnings season.
Well, if you see margins expanding, then you suggest there's pricing power and demand for the products. I mean, that's pretty simple. And I think that's what we're seeing with Arista Net in terms of the price action in the after hours. The other thing is if you look at the Q3 guidance for sales, that's important as well. 2.25 is the new estimate relative to 2.1. So that's a meaningful increase. So you're seeing, beats on top bottom lines, raising guidance. You're seeing price react commensurate to that. Most likely, you'll see the analysts that cover the stock closely raise their target guidance. Price action, it looks like it's filled the gap going back to early this year. The high looks like it's around 130. A lot of times, even in the after hours, the stocks will trade on the daily charts, and that seems to be the case right now. The stock is really inching closer to that 130. So if institutions start buying above that level tomorrow, this may be a next phase higher for Anet.
It's certainly a possibility, as I'm looking at their 52-week range, 133.57 is their 52-week high.
The beginning of the year.
Yeah, and we were just at 131 a second ago. Dan, what are you seeing in terms of price action?
Yeah, it bears watching. If it gets above that 130 to 135, it's kind of a key area. If it gets above there, you're going to start getting a short bid. Shorts are going to start reaching for it.
And Supermicro here, as the street is digesting this, just going down farther, they're down here at down 11% right now. George, for you, what do you think some of the most important questions on the call are going to be here?
Well, I think you brought up the word that really describes Supermicro. You brought up commoditized. I think that's the challenge for Supermicro. I think that irrespective of partnerships that they have and dealings with major hyperscalers or GPU manufacturers like NVIDIA or even perhaps AMD, liquid cooled servers is obviously technology that's way beyond my comprehension, but it may not be that complex to show commoditization across the board from companies like Dell and Hewlett-Packard Enterprises, which are legacy players in the server space. So I think that's always been the challenge for Supermicro, and I think that's indicative of the margin compression we've seen in the name. Like I said, the valuation compression has been there from a price to sales standpoint, but for a technology company that's growing in the double digits, both in sales and earnings, the margin is in the single digit range for net income margins. Even gross margins, by the way, I haven't seen this quarter, but trailing 12 months, 11.2%, 5-year average, 15%. That suggested that even though volume may be increasing, prices are decelerating. And they may be having to discount some of their product to get over that whole accounting irregularity issue that they had going back a year and a half ago.
Yeah, and as you know, we're about to get AMD here likely in the next minute or so. Dan, for you, what are you most looking for as AMD reports? Because this is almost our preview. Oh, and it's out right now, actually. Let's just tell you what it is. EPS coming in at 48 cents. That is a 1 cent miss off of the 49 cents estimated. Revenue coming in as a beat, 7.69 billion, estimated to be 7.43. R&D expenses came in higher than expected at 1.89 billion. The estimate there was for 1.72 billion. Operating margin coming in at 12%. That's in line with the estimate for 12.1%. Here comes that CapEx number everybody was waiting for. CapEx, $282 million. The estimate was supposed to be $176.5 million. So that CapEx number likely going to be very important. They missed on EPS, but revenue did beat. They're also putting out their third quarter revenue, seeing that about 8.7 billion plus or minus 300 million, and seeing that between 8.4 to 9. The street was looking for 8.37, so also a beat on their projected revenue for this third quarter. George, as we're just getting these numbers, thoughts, initial takeaways, will this be enough?
So far, it's a good question. I can't say right now. It's too soon to tell. We'll have to look at what's going on from a segment breakdown. That's what I'm going to be looking for, and I think the analysts will be as well, which is, last quarter, their data center segment is, of course, the preeminent one in terms of growth and total market share as well as total revenue base. It rose 57% year over year last quarter, 3.7 billion. They have to beat that number. That breakdown should be a beat, but I think the rate of change might be a challenge at 57% last quarter year over year. If they increase on both of those net metrics, I think they'll overlook the CapEx numbers, which were slightly higher, because if I got it right, it looks like it was about 100 to 150 million over estimates, but relative to total top line sales of 7.65 billion or 68 billion, it's not that much, so they may overlook that. But I do suggest that the client segment, which grew significantly last quarter as well, which is their CPU segment, and of course their GPU segment, needs to increase the rate of change compared to last quarter to see this move continue to the upside. So right now they're holding on, I suggest, because they're looking for the segment breakdown.
And they are announcing, too, in their statement here, the second quarter results were impacted by the government's export control of that MI308 GPU chip. That was expected to be a big part of the conversation here. Those restrictions did lead to approximately an $800 million inventory and related charges. So that was a number that's on the higher end, but in line of what was expected there. As we're trying to look through to get some more of these numbers that you were looking for specifically by segment. Here we go. Data center segment revenue was $3.2 billion. That's up 14% year over year, driven by what they said was strong demand for some of their processors, and it more than offset the headwinds that were impacting the shipments to China for those chips. Client and gaming segment revenue was $3.6 billion. That's up 69% year over year. It was a record $2.5 billion. That's up 67% year over year, driven by strong demand for that Zen 5 and the Ryzen desktop. And their embedded segment revenue was $824 million, down 4% year over year, as demand in some of the end markets remained mixed. Now, Dan, as we start to get those segment numbers, what are you seeing here, and what are your takeaways?
I'm watching this AMD. I do have some clients that cover this, that trade in this stock. It's kind of been an underperformer stock for most of the year, and like for the last few years. Look for some sort of like uptick here. It's only up 1% right now, but I was just going back to the Anet.
And
up
George,
13%.
And George, as we look at those segment numbers, which were so important, we're seeing growth across their important sectors. Embedded segment, a smaller one for them, but data center up 14% year over year. Client and gaming up 69% year over year, with that revenue at a record of $2.5 billion. What are your thoughts there?
Well, I think the client segment is important. Obviously, the value and the rate of change compared to last quarter was higher, because I had 68% last quarter to 69% for the client segment this quarter. Last quarter, gaming was down 30%. It looks like this quarter, at least right now from what I see, is higher. I think right now the reason they're toggling, or they're in inflection right now, is the data center, because if you look at the number compared to last quarter, even the rate of change were down compared to last quarter, while client segment was up. Now, that could be a function of the estimated sales impact because of China, which, again, there needs to be more clarity, I think, on the China sales, which were impacted because of tariffs. It's obvious that data center number, as well as the rate of change, was down and impacted in some capacity. But I think the question is the ongoing impact of that. That's what'll change the stock, either moving it from this point on, which we're near flat line right now, slightly higher, to either breaking higher or maybe selling off. Because I did see that the EPS, the estimates for sales the estimate for sales for next quarter aren't that much higher than the previous estimate. So we're not seeing too much sequential growth for next quarter relative to this quarter. So I do suggest some more clarity, and it may come from the conference call in terms of that data center impact from China, which just last quarter was estimated to be about $1.5 billion in total sales for the fiscal year. The other thing I think will be looked at is average selling price for MI350 chips, significantly cheaper than the Blackwell 200 chips, but can they raise prices? And I think that's going to be important for mobility in the stock moving higher, on an ongoing basis, at least tomorrow or later on after the conference call this afternoon.
Well, George, Tsilis, Dan Grant, thank you for being with us to break those down for us. AMD, EPS in line and a revenue beat, Arista net beat on the top and the bottom, and Supermicro had a miss on both the top and the bottom, but they are not the only